What's up, everybody? T Money here. Today, I wanted to talk about a trade that I took yesterday as an example of trading around the core. Not every trade needs to be binary, where we have one area where we're buying, one area where our stop loss is, and maybe one or two profit targets. One of the benefits of being day traders and trading on either shorter time frames or with smaller amounts of money compared to billions of dollars like some hedge funds is the ability to be nimble. So I'm going to walk you through this trade really quickly to show an example of that. We have the NASDAQ futures here. This is what I was trading. Could also be trading QQQ for this. On Friday yesterday, we had the jobs report number that came out 8:30 Eastern time. So an event like that can bring a lot of volatility into the market. This number, especially, a lot of people were looking at because coronavirus, obviously, a ton of people unemployed. So, that being said, the Qs were gapping up right to this 9,200 area off the open. Short, medium term or even longer term trend is obviously up at this point, but with the gap up, using my volume profile to look at some potential resistance areas. I'm saying, do I want to be a buyer right up here immediately off of this news right after the release, or do I think the risk reward is on the short side? So because of this area and unemployment numbers, thinking maybe even we could get a day or two down with this, I'm looking short. And then that brings us from the daily to the 5 minute chart here. And this is right around when the announcement came out, right before the jobs number came out. We were 9170, 9180. So I'm eyeing this 9200 area. Also coincides with the daily. And then we have 9215, these prior highs, and then 9238 is pre-market highs for some areas to look at as far as stop losses. So jobs report comes out. Doesn't matter in my opinion what the numbers are. I'm trading only price action here, and this is something that brings volatility into the market. We pop up. I shorted Summit 9205, and then I it kept moving up, and I added some at I think 9217 was my next short. So I shorted four contracts at 9205, then I shorted another six at 9217. Then that ended up being the high right there for most of the day. And after I short that, we pull back in. I covered a little bit at 9182. Then at this point, after my first two shorts, I'm risking maybe max $400 if we take out this high right here was 9229, so 9230 was going to be my stop loss on everything. So I'm risking 300 $400. I covered the market pulled in. I covered a little bit at 9182. It popped back up. I shorted more at 9205, but at this point I'm building a bigger core position, so I'm booking a little bit of profit and shorting back some at a higher price. So now I have some booked profit, and then I short more. So now my overall position is bigger, but because I already booked some profit, I still have about the same $400 risk in the trade. And I did this I think twice actually. When it came down to 82, shorted more. It came down to 70s, or the 70s might have been the last time before it popped back up. But either way, I now had about 2 to 3 times my original position size with the same stop and same risk. And then as this tanks here pre-market right off the open, I'm covering, and strong bounce back. The market bulls are still in control here, so I I ended up giving back a bunch of open profit in the name. I ended up 800 on the trade, risking only 400, which 2 to 1 risk reward right there is very good actually. But or good, not great. But down here I was up like 2,500 on this trade, which is fantastic risk reward for this spot. And then also keeping in mind holding half of my position for maybe this is a resistance spot where the market actually does want to give more of a pull. So I made 2 to 1 on my trade, not risking a lot. Good. I built a big position to make potentially even more than 2,500 dollars, maybe even three, four, 5,000, even six if this wanted to pull to 9,000, which was kind of my target that I would have covered everything. So yeah, hope you find this useful. Just an example of what I'm thinking about going through a trade and some different ways to work a position so that you don't need to buy or sell it at one specific location and use the use our ability as traders to be nimble as an advantage.